Hey guys, so today I'll be covering chapter 8, accounting for other businesses enterprises. So in the first subtopic we have manufacturing. So what is manufacturing account? Manufacturing is firm's final accounts and it provides details regarding prime cost and overhead during the production. And it doesn't show any profit or loss, and also focus on raw materials and work in progress. On the next one is trading and manufacturing differences. Trading has one type of inventories while manufacturing has three. And the selling price for trading is determined by profit in purchase price while manufacturing is by cost. Moreover, we have elements of manufacturing cost, that is prime cost, direct materials, direct labor, production overhead, indirect materials and indirect labor. On to the next one is loose tools. Loose tools are small tools like hammers, screwdriver and scales and etc. These tools are not fixed assets and it is indirect materials and part of overhead, and it can be recorded as current assets. Last but not least, we have work in progress or WIP. This is not a finished good and it is valued at prime or production cost, and the adjustment is made at the beginning and the end of period. So the next subtopic we're going to cover is about branch. There are two types of branches. The first one is selling agency branch. It is dependent because activities are monitored by head office. And the second one is autonomous branch. It is independent because it have considerable power to make decision. Next one is branch and head office. The primary purpose is to maximize profit. It is not a separate legal entity. It have authority to make decisions on management, and activities are still monitored by head office. Let's go to the next one, that is autonomous branch. Autonomous branch prepare its own trial balance and final account, maintains the head office account. So the last one we have is current account. It is a record that keeps track of daily financial dealings of head office and branch. It is also a tool to monitor financial connections. The last one we're going to cover is about non-profit organization. So what is non-profit organization? It is also known as non-business entity. It provides facilities and services instead of making profit. It is not a monetary gain purpose. Examples like NGOs, and it does not need to pay income tax. What are the difference between profit organization and non-profit organization? First is their purpose. Profit organization is to maximize profit, while non-profit organization is providing services for free. The next one is profit organization must pay taxes as the law requires, while non-profit organization qualifies for tax-free fundraising. And last one is profit loss is transferred to capital, while non-profit organization surplus deficit is transferred to accumulated funds. And for accounts of non-profit organization, we have receipts and payments, account for cash and check transaction, income and expenditure account to find surplus or deficit, and accumulated fund to represent form of capital account for non-profit organization. Last but not least, we have income peculiar to non-profit organization. So we have annual subscription, interest fee, life membership subscription, donation and grants. So that's all from me. Thank you.